Welcome to Wall Street Week, the show of record for long-term investing. I'm Gary Kaminsky.
And I'm Maria Bartiromo. The president-elect is a businessman, and the Senate and House are Republican majorities, so it should be no surprise that the markets have reacted with an extended rally. But to hear Trump backer and Wall Street icon Carl Icahn say it, traders could be getting ahead of themselves.
They went down 1,000 points the night he was elected. It was ridiculous. And I bought stock then. Not that I'm so smart at trading. I'm not a trader really, but now I think it's run ahead of itself somewhat. Yeah. But you know, no one can pick the market.
Does Icahn have it right? Joining us now is a titan in the hedge fund industry, Kynikos Associates founder and president Jim Chanos. Jim, thanks for joining us. You've been on a number of trades on the opposite side of Carl. What's your thoughts of what he had to say there about this week's reaction in the market?
Well, I think you should listen to Carl. First of all, thanks for having me. I think you should listen to Carl. It's pretty hard to time the market, short term. So longer term, I know he's been concerned. We try not to time the market ourselves, and certainly not to political events.
Like but as it relates to the rally that we've had since the election,
yep.
Into the sense of what the Trump administration might do in terms of growing the economy, is the market fundamentals getting ahead of the reality of what could actually be achieved?
Well, one of the things we told clients this week is to step back a little bit, in that I'm a lot older than you two, and I remember previous election excitement. And we can go back to 2008. If you remember, we had sort of our kumbaya moment. The whole country came together after Obama. But the business and finance community was almost unanimous in just how bad this was going to be for the economy and the market. He was going to dismantle the banks. The market, as you recall, was going down at that time. We were in the middle of the crisis. It kept going down after his election. And everybody was virtually certain. I had a long list of articles I sent out from late 2008, early 2009 on just how bad Obama was going to be for the markets and the economy. And you know what? The people that watch this show, your viewers, they did okay.
Yeah.
They did okay. The market tripled. And he kept the Bush tax cuts. And while it was not the greatest recovery in the world, generally financial assets did well. Go back further. Go back to George W. Bush's election. Perhaps the most corporate-friendly nominee before Mr. Trump to be elected. He got the House, he got the Senate, and we were going to be off to the races. But events conspired against it.
When you look at Trump's actual economic policies, the fact that he wants to take the corporate tax rate to 15%, the fact that he wants to roll back regulations, do you think that would move the needle in terms of corporate earnings? Do you think that alleviates pressure for companies?
It depends, Maria, because remember, the effective tax rate that corporations have been paying is quite a bit lower than the 35% or so. Depending on who you believe, it's either 15 to 20, low 20s. So from a cash point of view, they're not going to have a whole lot of improvement. Now, guys like me are going to get their tax bill cut in half. I mean, we can argue that. But
what about the rollback of regs?
Well, I think the rollback of regs is possibly a big positive for certain industries. But again, I've seen that Washington has been awfully resistant when you get into the weeds, or the swamp, if you will, on actually doing the things that they say are going to do. And that, I think, we have to be a little mindful of and a little cautious of. There are limits, even for presidents that come in with both houses. And presidents find this out very quickly.
You know, Jim, you were a Hillary Clinton supporter.
I was not.
Well, didn't you say you were going to vote Democratic?
I was, yes, I was a...
Right, you were not a Hillary Clinton supporter, but you were going to vote Democratic down the ticket.
Yeah.
So you were a supporter, come on.
No, I was not a Clinton supporter.
Not a Clinton supporter, but like...
a Democratic supporter,
So what do you think actually happened? What's the message from the election? What do you think happened?
Well, I spent a lot of this fall in my home state of Wisconsin.
Right.
So, and it's very... To me, it is very clear that her message just didn't resonate with people that the Clinton campaign thought it would resonate with. And I think they'll be doing postmortems for years to come on this. And I also think that had someone like Biden run from the party, right, I think he would have won. So so I think the question is, how did the candidate not resonate with the voters to the extent in the heartland that they thought. And I think we know the answers to that.
It was the working man and woman. You're so smart to bring up Wisconsin, because that's really the example of what happened this election. It was the working man and woman. And Trump went to Wisconsin a couple of times.
Yep.
Hillary never went to Wisconsin.
And they kept telling me that.
Well, the thought is obviously the exit polls showed that the economy was the main issue and the hope that the economy will grow. In terms of that, we had David Stockman, former Reagan budget director David Stockman, on this program last week. Take a listen to what he had to say about the economy.
There's nothing to rescue this economy. We're going to have a recession. I follow the IRS, not the BLS. The IRS tells me how much money they're collecting, and it's been flat and actually negative for the last 4 or 5 months, even on payroll taxes. And that means the economy is long in the tooth. It's slipping into a recession.
Is he right?
I think data like that, or the state withholding tax data, is pretty good data, and it's always been a lot more accurate. I think this economy is not hitting on all cylinders. I think it hasn't been all year, and so I think that has helped. It helped certainly the Republicans in the election. I think this is, it's a big globe, and there's lots of stuff going on out there beyond just the U.S. economy. And I think that we have to watch what's happening in Asia, in China, in Europe. And so these things are all going to interplay. But as to whether we're not growing at all, I don't know. That might be a stretch.
What about the sectors? You said that there are a couple of groups that you can understand that would be positive in terms of the regulations rolling back. What are those industries, Jim?
Well, I think there would be certainly some areas like energy, with various different parts of energy and transportation, where I think less regulation will be perceived as a positive. But again, be careful what you wish for, because relaxation of certain rules may end up being deflationary for certain assets. And so it's always hard to sort of connect the dots in ways that we're certain of.
The banks certainly have been rallying, right?
Yeah, the banks have been rallying, but again, if you look at say what Mr. Bannon has outlined as his worldview, he calls it hard capitalism, and hard capitalism wouldn't be too friendly to some of the banks, and he was vociferously calling for jailing of bankers, for example. So, by the way, hard capitalism would be fantastic from my perspective if actually winners win and losers lose. And the taxpayer doesn't pick up the difference. Hurrah for that, whether you're a Democrat or a Republican.
So is it safe to say that your overall outlook is, I understand what happened and I understand why the markets have moved, but be warned that some of the things that may be being thought, we may be over our skis?
We may see things happen and change in ways we don't foresee, and that is the lesson of the last major Clinton 92, W in 2000, Obama in 08, and possibly Trump in 16. Things don't work out as the roadmap says they should, and they haven't in each of those changes. So I'm just a little cautious to say, oh, well, this will happen because we expect that to happen. Well, it doesn't always work that way.
You still brought your hat.
Well, this is actually a present for you guys, because I got this as a present, so I'm re-gifting, and I can think of no better place to do this to the folks at Wall Street Week, to make portfolios great again.
Make portfolios great again.
So that's from the Bears to the Bulls.
Well, we got to find out how to do that from you.
Great insight. Don't go anywhere. Wall Street Week will be right back.